We are sitting with deep-seated challenges, disparities between black and white everywhere, whether in education, in health. We have those difficulties. The South African economy can't continue like this. So we must start with the ownership patterns. VBS chair is no more. Itala may go at any time. So if those were the only two banks that we have in the 30, it means there is nothing. So I'm interested on fundamental issues that make us to move forward before we invite a disaster that can come and devour us all. We will have a serious uprising one day in this country by ordinary people who think that the authorities that are there do not represent them. It's very difficult. I mean, for a small-scale farmer to participate in farming, a small, medium enterprise to have access to the economy, very, very difficult. And some of the banks here even hold provincial accounts. What are the targets for those banks that are holding accounts for provincial governments? We just give you the government account for 5 years, and after 5 years, we are still here. I know. This is not how we must continue. Let's get to the fundamental issues about how there is equality of arms in the South African economy, and not until we confront that debate. Statistics are not taking us anywhere. Thank you.
Thank you. Honorable Van Ryan, what do you?
All right, thank you very much, Chairperson. Let me quickly go to my questions. I'm somehow restricted by this time limit. Chair, maybe let me start by welcoming the initiative championed by yourself and Honorable Messina, as mandated by the so-called GNU government. As MK Party, we are overwhelmed by complaints from ordinary South Africans, mainly Black individuals and Black-owned businesses, about unfair and discriminatory treatment by the banks. And I think that has been attested to by most of the people who spoke before me. And it is our submission that this process should also accommodate submissions and participation of the affected. So as we have the full picture, because I think what have been painted by most of the presenters seems to be a very rosy picture of the efforts that they are putting in place. Let's hear the voice of the affected. And I'm submitting to the two leaders of these two committees, capable leaders of this committee, to make sure that we accommodate this as an important aspect of concluding this process, so as we are able to recommend accordingly on what should be our approach. BASA to BASA, our constituents have been very, very outspoken about coalition that is happening between the banks and BASA. So we want to know, SMK Party, if there's any coalition between BASA and the banks. Chairpersons, compounding this matter, I must indicate, is the fact that BASA, just recently in the case of Sekunjalo, provided affidavit in the equality case against Sekunjalo. The question is to our constituents, why did they file this affidavit? Does it mean they did discuss the case in BASA? Do you discuss cases of clients as BASA and the banks? Also to BASA, our constituents are arguing that the big banks, most of them, they meet BE compliance, we agree, just because most of them, senior politicians and government officials or their families or relatives are targeted for inclusion into this BE transaction. Is there any truth to this submission? Are you able to give composition details of this transaction without necessarily being general? And to the public, to your Prudential Authority, Parliament recently resolved that more considerate and sensible, and of course, gradual process should be embarked upon by all stakeholders to ensure that Itala is supported to be a fully fledged FSP. Contrary, the PA, of course, under the leadership of National Treasury, as much as National Treasury is all the time trying to convince us that it's not in charge of your activities, snapped that process. It's important for us to know what is your position about the resolutions of Parliament of South Africa, because Parliament of South Africa resolved that you must follow a certain process to address the issue of Ital. Under the leadership of National Treasury, you decided to snap this process. Can you give us reasons as to what's your take on this resolution of Parliament? Because it's important for us to understand that. And lastly, Chair, it has been brought to our attention by our constituents that out of desperation, Itala database has been handed over to FNB. As we speak now, clients of Itala are being harassed by FNB, urging them to join FNB. So I'm just concerned from the POPIS Act provisions. Maybe I should start by asking if the Prudential Authority is aware of this particular practice. If is it aware of this practice, what is its reaction? Because from where we are seated, this is anti the provision of the POPIS Act. Who authorized the transfer of Itala clients to FNB? So to us, it's clear SMK party that this is more a political process where people are desperate and expeditiously wanting to take over the clientele of Ital and collapsing Ital as the only surviving black initiative with an opportunity or potential to have a fully fledged, to turn into a fully fledged SSP institution. So please let us know if you are aware of this and what's your take on this. Thank you very much, Chair.
Thanks. Honorable Moani.
Thank you, Chair. I would like to also welcome the presentations, and because of time, I would also like to just shoot straight to the questions. I'll take from what Honorable Des has left. We as MK Party also have noted with interest the cross-directorship that exists between the banks and BASA. Now the question is, in this arrangement, did you consider the issues of interest, of conflicts of interest? If this relationship between a bank and a regulator exists. Also, there's a threat to independence because we would expect that a regulator would be independent from the banks. So in the instance that you have a bank or you have a director that sits in both the bank and BASA, so then with the issue of independence, how do we look at that one? How do we look at that one? Was that even declared by the member when they move or when they have this cross-directorship? That's number one. Now, number two, Chairperson, we also would like to note with concerns that the giants in the financial sector perpetuate unfairness and neo-apartheid systematic racism practices post-1994. And why are the banks, the major ones particularly, have not closed certain accounts for the certain clients because they have taken a step to close certain accounts? To mention a few, we've seen that there has been companies that have been with so much controversy in the financial sector, which would for instance, Tongaat, Steinhoff, Glencore, they've been faced with so much controversy, but they still have accounts with these major banks. But Segunjalo and others have already faced their day in court because they've already experienced a closure of their accounts. So what is a great or of great concern is what you do on the left is not what you do on the right, which then supports the notion that there's still discrimination amongst the treatment within the financial sector. What you do with the ones with the ones who are privileged is not what you do with the ones who are marginalized. And this then does not speak, dear Chair, to the agenda of transformation and inclusivity, of which that is actually what this what the financial sector should be actually supporting. The last one, Chair, from the presentation, we've noted that 90% of the market share is left with a few, just a 5. 90% is left with just 5. And Chair, this sector is so monopolized that the only 5 or these 5 only just eat the whole piece of the pie. And this, Chair, then leaves us with an environment that is not competitive, number 1. Number 2, then this does not address the issues of transformation and inclusivity. Number 3, Chair, this monopolistic agenda that is being pushed by these first 5 also enjoy significant overreach as arbitrary closer to black business account holders. They just close these accounts and they just tell you no reason, or they just don't disclose as they should be disclosing. And we've experienced, or our people experience, a situation whereby they can't even appeal these closures, these account closures. They can't get full explanation as to why these accounts are being closed. And Chair, as I close,
Okay, please.
as I close, Chair, this committee should, Chair, expedite the process of ensuring that we have a policy that would speak to the redress that is experienced by the small players in this industry. You know, you see small banks, these youngsters that are coming in this industry where there's these 5 that are monopolies. They are we're actually using one ruler to measure the small ones that are coming into the industry, which I think it's not fair. For instance, we are sitting with a collapsing Itala Bank because we are applying the legislative mandate that exists in the banking sector. The ruler that we use for the big ones, we are using on the small ones. So I think, Chair, it is very important for this committee to look into having policies that will address the smaller players in this industry who are coming in. Thank you.
Thanks. Honorable Alexander.
Thank you very much, Chair. Thank you earlier for the presentations. Currently, South Africa is still on the grey list, and this is obviously affecting the cost of the banking services because of the increased compliance costs. Higher banking fees for often lower income customers, the reduced ability for affordable financial products for the underbanked in the market, and resources being spent on compliance rather than transformation initiatives. So the question is, while South Africa is remaining on the grey list, what are to the banking sector, what concrete steps have been taken to help get South Africa off the grey list? One of the biggest issues of us remaining on the grey list is our inability to prosecute complex financial crimes. And we will remain there until we can demonstrate that. What role is the banking sector playing in order to help South Africa get off this grey list? Thank you.
Thanks. Honorable Thring.
Thank you, Chair. Chair, I will also just read my questions for the brevity of time. To the South African Reserve Bank, how is it that the differential, or rather, how is the differential between the repo rate of some 7.5% and the prime lending rate of 11%? How is that established? The differential currently sits at some 3.5%. But do you agree that when looking at the huge profits made by the banking sector with the return on equity of some 14.6%, the banking sector having the highest profit margins of any industry in South Africa, that when looking at this as opposed to the enormous financial pressure placed on most households, ordinary households in South Africa, there are a few basis points reduction in that differential of some 3.5%, currently 3.5%. There are a few basis points reduction in that differential would certainly add relief to the consumer. So if we could have a reduction in that differential, do you agree that this is the case? It would actually support and assist the hard-pressed consumer in South Africa or household in South Africa? And if you do agree, when can this be implemented? If not, why not? To Basa, the next 2-3 questions to Basa. Noting that the 40 billion rand that has been made available for empowerment financing for the black small medium enterprises, what percentage of the MSMEs are assisted by the banking sector? We also know that most developed and developing economies in the informal sector, rather are the informal sector plays a huge role and are the bedrock of these economies. So what is the actual percentage of the MSMEs that are actually being supported by the banking sector? The banking sector has also been accused of discrimination by shutting down accounts of customers on the whim of being a reputational risk to banks. Banks view the banking relationship as a contractual one. And this contractual relationship is one which the banks can terminate by giving 1 month's notice, and that without explanation. But certainly we need regulations to ensure that no bank is, that no business rather, is discriminated against unfairly. And can Basa speak to regulations that may be in the pipeline to avoid this unfair discrimination? I personally have had 2 experiences where one of my personal accounts was shut down without notice, and another account on which I'm a signatory about a month ago was shut down without notice, and the bank just said, sorry, we didn't send you a notice, we apologize. But if one looks at, when I actually inquired, when one looks at what kind of risk this has as a barrier to economic growth, if one looks at the implications of this on a multiplicative level, if this is happening to 500,000, 1 million South Africans, where they are not able to interact and make any transactions because of the banks that have this arbitrary ability to shut down one's account. So Basa, what kind of regulations are in place to ensure that this does not happen to ordinary South Africans? Thank you.
Thanks. Honorable Mputu.
Thank you very much, Chair. There are just general comments, Chair, that I would want to make, and I would want the governor to comment on. Just for context, Chair, you know, the structure of the South African economy historically has been built around serving white minority interest in South Africa. And this is how the structure and the architecture of the South African economy has been. And institutions have been built to support this structure. Now, if you speak about ISCO, if you speak about ESCOM, ITC, and in actual fact, I dare to say the South African Reserve Bank as well. There's been this coordination, and this is pre-1994, to build a sustainable economy that grows, but grows in the interest of white minority rule in South Africa. And so in the first instance, we must understand that these institutions have been built to support that. Now, and the South African Reserve Bank has played a monetary role in driving financialization in South Africa, but also funding industry for development in the productive sectors of the economy to build that economy, which was post-9/11. So this is the history of the South African economy. And Chair, I promise I will not speak as a complainant because I'm a lawmaker. So I will speak as a lawmaker. Now, my view is that fundamentally, Chair, have not been able to transform these institutions. And when I speak about transforming them, to play a strategic role in the structural transformation of the South African economy, the South African society in general. Now, in 1921, Chair, when the South African Reserve Bank in actual fact was formed, it was to play a particular supporting role to this design, architectural design of the South African economy that serves white minority interest, and to address the challenges, of course, which were around financing, creating low interest rates, financing development, and so on and so forth. ISCO, ITC, and at that time, it was termed to solve the white poor problem, in fact. So post-1994, Chair, my view is that, and something funny happens post-1994, is that as we are speaking about transformation, if you look at the focus of these institutions, has been precisely about managing the South African economy, but has not been about changing the patterns of ownership, control, and management of the economy. Now, in 1994, a funny thing happens is that the South African Reserve Bank decides that actually its focus should be around the issue of managing price stability in South Africa. Now, now the national objectives, the national imperatives of the post-1994 government have been about resolving the triple challenges of inequality, poverty, and unemployment. And my question that I wish that the Reserve Bank governor could respond to or comment to is that what is the extent to which the Reserve Bank has been in synergy with the government of the day in producing conditions of resolving these challenges, these triple challenges that we're faced with. And there's a view that I would want the governor to comment on about how there has been a dealing of what you call social consciousness of the Reserve Bank to a market consciousness, where it seeks to serve the interest of the market than the interests of the general populace of South Africa in developing its economy and investing in its people by ensuring that it manages, one, the supply of money in the economy, but also interest rates in a manner that seeks to develop the South African economy and the South African populace in general. So I would want the governor to really comment on this thing. I would have quoted Marx on this matter, which I would want also the governor to respond on. I'm almost done, Chair. But I choose to quote Keynes because I understand that everyone now, when I quote Marx, they will just shut their ears. So Keynes says, and I quote, "Bank credit is the pavement along which production travels. And if the bankers knew their duty, they would provide the transport facility in order for productive powers of the community to be employed in their full capacity." And I've paraphrased it, I close quote. And again, from the regulator, to what extent do we appreciate this? That we've got to regulate, and I differ with the fact that actually the financial sector is over-regulated. I think it's under-regulated in relation to creating laws to force the hand of the banks to meaningfully direct credit allocation to productive sectors of our economy, but not for consumptive purposes. And what is the extent to which the regulator has been able to channel the resource of banks in relation to productive development of our economy? And I would want the governor also to comment on that matter. I won't speak, Governor, on the nationalization of the Reserve Bank today. I don't want to stress you. You know, Chair, I thought, and I think I need to belabor this point because I think it's a general theme amongst the members around the matter of the allegation that is there of racial profiling. which of course is informed by history. It's not just anywhere, it's informed by history. And the history is that Black people don't have assets. And so they are a risk in any case. So when you walk into a bank, as Lufefe that is just come out of a university, you are working with an NSFAS debt in the bank. That's the first instance. And a white counterpart who is my age, just left university, is working actually with a trust fund. And so I'm risky in terms of borrowing. And this is what we speak about racial profiling. We're not speaking about, no, you're Black. No, we're speaking about the context of the racial profiling. And it's true, it's not an allegation, actually, it's there. And we would want the bank to kind of comment on this matter because we think that it's important. Again, you see, there's something that is not spoken about in this country. I don't know why. Banks manipulated the rand. We're told that cases are closed. This one is still continuing. But we're not getting a sense of what has been the investigation in this grand corruption, which has made a knock in the South African economy. And in fact, Black people and the majority of our people have suffered from this grand corruption. And I guess corruption in the private sector is always kind of nicely done, you know, that no, it's a rand manipulation, it's corruption.
Okay.
Just a last point, Chair. Let me leave this matter off. Just
more, yeah.
Okay, I'm sorry, Chair. No, the last point on BASA, Chair, I have never, Chair, had an industry association that praises it's like a shop, it's like a shop steward praising a boss. I mean, you are detached from reality. Your mission is simple. How do you ensure that there is contribution to social and economic development and transformation? And none of that has been, in your report, you have not fundamentally gave us an analysis, one, of what is the landscape in the banking sector and what are the interventions in relation to transformation. You're just throwing us with numbers, which, by the way, those numbers are not informed. If we go deeper, to say, if you're speaking about this SMME thing, how many Blacks are there? How many youth are there? How many women are there? But you're just throwing numbers and like just singing praises. And the fundamental issue of ownership, control, and management. And I think that if you are speaking about inclusive economy, you must ask the question, who is being allocated these resources in the banking sector? Because you're speaking about mine in the agricultural sector, this is how much was spent in the manufacturing, but if we can go to who in the specific, and these are the things that we thought that you are going to engage us on,
Okay.
but you have just opted to just be a praise singer, you have opted to really be a spokesperson of the banking sector, of the financial sector. Thank you.
Thanks. Lastly, Honorable Masina, Chairperson.
No, thank you very much, Chair. I think
Wait, there is a point. Yes, Honorable Member. A point of exigence, or you want to contribute? Okay. Okay, we'll deal with your matter later. Honorable Masina, please proceed.
no, thank you very much. Also, let's welcome the presentation from the three institutions, the Reserve Bank, the FSCA, and BASA, which is the Industry Board Association for the Banks. So I think as honorable members are asking, you mustn't think that we don't understand the role of the association, probably as created by the legislation. You are likely to work very close with the banks. I just wanted to ask a question to the Reserve Bank Governor. Why are the major banks still shareholders of the African Bank? What is their strategic interest, if they can just indicate to us, if they are not double dipping? And this question is very relevant because if you look at what we are being told as the joint committees, that you've achieved the highest level of ownership and control And the fact is not, it's very far from the truth. And, we've tried leading to this occasion. This is a question to the Reserve Bank. We'll ask the bank directly, differently, other questions. Leading to these questions, we tried to do a lot of research to just try and say, who are these people? If you look at Standard Bank, almost all the 9 shareholders who are there, who are listed, we can ask now. So we'll ask them. So tell us, where is Mr. Skosana or Mr. Mukwena in this shareholding directly? You will struggle. Probably FNB will say Royal Bafokeng because it's their shareholder. Investec, it's the same old. It's a financial sector owning itself. So who's black there? In terms of transformation, so as Nedbank, so as Absa, so as Capitec. I don't know, there's some Libashe or something, maybe it's black, I don't know. Would ask these questions directly to this bank. So, but we're asking the FNB because we want to understand why is the Reserve Bank allowing these kind of reports to go through as a tick box, which is why it's a reason we felt as the committees that beyond prudential authority matters of ticking the box, whether you've got capital ratios and all that, that you tick every day, you praise yourself as a bank, as the best banking institutions in Africa, who are fine, but you are not transformed. And we're asking this to the bank. And actually, there's a typical matter. There's a fellow from Reserve Bank, colleagues who are here, and the governor, Daniel Minel, who want to know how did it happen that he moved from Reserve Bank under whatever conditions, because we're not here to talk about him as a person. We just want to show the inability of the institutions that are charged with the responsibility to manage the bank. They are not doing their work. How did he move from Reserve Bank under those conditions, which I will not disclose because you know them, to Absa, which Absa, by the way, accepted through Maria Ramos that they manipulated the rent. He moved from Absa and became the chair of Nedbank. And all those appointments are done by the Reserve Bank. I want to know, where was the Reserve Bank that is supposed to be looking after the interests of South Africa when the law is so clear and precise? Just one individual who moved from the Reserve Bank into 2 or 3 other banks, if we are holding each other accountable. Now, so this issue of the manipulation of the rent, the same person asked the bank when he was in the Reserve Bank, he says, write a report about yourselves. They did. They wrote a report that basically says, we have not done anything wrong, which probably was the basis for the court to come to the conclusion after the admission by some of the banks, including Absa. We want to know from the governor, when did the Reserve Bank know of this issue of manipulation? And can they confirm whether or not it's true that the same person that is being flagged by Parliament today was the same person who gave authority to the banks to come to write their own report that exonerated themselves? And what was the role of the Reserve Bank? Now, we know that some of our institutions, the Nedbank is having a case with the Competition Commission on the related matters, and we want to know what is the role of the Reserve Bank in as far as that is concerned. The other issue that I wanted to ask is that, so when this manipulation happened between 2007 and 2013, as the Prudential Authority, what measures did you put in place that probably averted you from not seeing that something was happening, so that we have clarity with regard to those issues? the issue of the banking association, I really do think that it's one conversation, Comrade Chair of the Committee on Finance, we must have. Because in every fair game, you don't have a referee and a player. If you have a referee who's also a player, the other team will have more people to play. So how the Act of 1990, which is an apartheid act, created the banking association is in question. And I do challenge my colleagues in Parliament that it's one area that we need to look at, because there are other industry associations that are not created by law. There should have been some intention basically to protect the apartheid banking architecture, which is today we are told is the best. And we are saying it is not the best. It is not the best because it represents the past. There has not been any inch of movement in terms of transformation here in South Africa. And we want to raise this issue quite sharply as we look into some of the reforms that we must make, so that if banks want to have their association, like all other industries, engineers, they've got engineering council, lawyers, they've got lawyers association, and the banking association must be like that. It must be a voluntary organization so that people can go there. They must not be protected by law, because even some of the members of parliament, they are confused whether you are a regulator or they don't know. You are not the regulator. You are an association of banking. You represent their interest and aspiration, you know. And on key things that have to do with, because we represent the people as we're seated here. On key matters, for instance, one of the profound submission that was made by the Banking Association on land expropriation on Section 25. You completely disregarded what happened in 1652, that which became even more legislated in 1913 when during the 1913 Land Act. You went on, you looked into the book, what is the mortgage? You gave us figures, you said, therefore, you cannot do that. But what you don't do for the people of South Africa, a farmer who's funded by one of the banks, he's got an asset he can use to come and look for loan. Yet, the people who have, because he's got a title deed, yet the very same people who might have pieces of land there, they're unable to do the same because their land is not worth it. And all these things are by designs, and at the center of it is the banking system in South Africa, without blaming the banks themselves. So we want to raise these things quite seriously, that we really, really have to reset and look at how we should do things moving forward. But we'll engage as we move forward. Thank you very much, Chair.
Thanks, Chairperson. Honorable Bisley.
Thank you, Chair, for acknowledging me. Chair, just a matter, there's two matters that I'd like just to quickly raise. How much time I've got, I'll stick to the time limit. The FSCA presented one of their presentations, two matters referring to FinScope's stats. The one refers to a number of never banked adults that sits around 5.4 million, and then a number of unbanked adults, which is 7.2 million. Can somebody just explain the difference between the two, and what is BASA doing about that? My concern lies with the individual banking and what the association is going to do to ensure to support these 7 million people without banking accounts. The second matter I'd like to address, if you allow me, is the compliance with the sector scorecards are great, and I see that you did very well with that, and it's obviously lying on a level which is greatly appreciated. However, so what? I get a sense that it is just a ticking exercise, a box ticking exercise. You spent 337 billion rand on developing empowerment in this country. I would like to leave this with you. In a statistical report that was done by FinScope in 2024, approximately 50% of SMMEs attribute access to finance as the main hindrance to starting a business. So on the one hand, massive support is given to SMMEs, but when you get the purview of the SMMEs, they say differently. I really would like to know, what are you going to do about this? And the reason I'm asking this question is, we are very clear. The growth of economy and ensure that we reduce unemployment lies within the informal sector and the small businesses. Corporates are not contributing to that at the moment. They are reducing and shedding jobs, and they don't want to grow the economy. Every single SMME, every 16 months they grow, they create 6 jobs. So my concern lies with the fact that we are not doing enough for SMMEs, and my concern lies within that you report that you do, but when you speak to the SMMEs, they say differently. I'd like to have your view on that. Thank you, Chair.
Thanks. Is Mr. Beasley still there in the virtual platform?
Yes, I am, Chair, and can you hear me okay?
Yes.
Apologies for not
Can
being there. I
proceed.
had a surfing accident on the weekend and broke my hand. So just a question of clarity that for the FSCA, and the honourable member before spoke to you about 7 million individuals unbanked, but the FSCA said that this equates to 2%. So one of the statistics are wrong. It can't be 7 million or 2%. If it's 2%, it's not many people, but if it is 7 million, it's nearly 13-14% of the population. And then a question to the Reserve Bank Governor, and it's very much of a macro question. What impact is the lack of economic growth having on the banking sector and the ability of the banking sector to transform and transformation in general? And then just to all the presenters, the VBS scandal had a big impact on the banking sector, and now the latest with Itala and with SIU doing the investigation. What impact is this having on the banking sector and how the banking is perceived, particularly with those who have lost their savings? Thank you, Chair.
Thanks. Of course, we are moving behind time. We'll have to do something to manage time. Let me allow Reserve Bank, FSCA, BASA to respond in that order. Is it possible that you can take 7 minutes each? Otherwise, we are going to have problems in the second round when the banks are going to present. And I suspect most of you have flight schedules, which might be difficult to change. So if we agree that we are closing at 17 hours, at the speed that we are moving, we might not manage. So I'll probably, Chair, we need a second round with the regulatory bodies because you can see that we need enough time to engage them. The Prudential Authority, the FSCA, and probably the BASA. So let's agree that we'll have another round with probably with them only. Reserve Bank, 7 minutes strictly.
Okay, thank you. Thank you very much, Chair, and thank you to the honorable members for all the questions. So, unfortunately, I'm told the governor is no longer online. So he has promised that all the questions, from all the questions, he will submit a written response to the committees. And then questions on Itala, I will hand them over to my colleague Emmanuel. So maybe, Chairs, just to answer some of the questions and maybe starting to clarify. So the mandate of the Prudential Authority, which is given in the FSR Act, is about the safety and soundness of individual financial institutions. So for the banks in particular, our role is to make sure that we protect the funds of the depositors. So all the actions that we take as an institution, the first question that we ask is always, are the depositors' monies protected? If they are not, we then take action. With regards to the mandate of the sub, I take it this will be part of the questions that will be submitted to the governor. I know that the issues around the mandate of the Reserve Bank have been long debated for many years. My understanding for now is that the sub follows the mandate as per the constitution, but I think certainly a debate around the expansion of the mandate it's a warranted one. The third issue that I wanted to address is just to remind honorable members of the tiering that we have in the banking sector in particular. So at the top end, we have commercial banks. In the middle end, we have what is called mutual banks. So in terms of capital, you need about 10 million in capital to form a mutual bank and other requirements. And all that we do as the Prudential Authority is that we assess the applications as they come and whether they meet the requirements that have been prescribed. And then the third tier is the tier for cooperative banks and cooperative financial institutions. These are member-owned and member-controlled entities, and you need to have 200 members, 100,000 of share capital, and you come to the Prudential Authority for licensing. So this tiering makes sure that there are different avenues or different opportunities in terms of entering the banking sector. The other question, Chair, that I wanted to touch on is with regards to the minimum requirements and that the banks are actually exceeding some of these requirements. So we've got no say in terms of the banks exceeding the minimum requirements. They can come and explain when they present. So for example, if we are looking for a liquidity coverage ratio of 100%, we are happy just to see 100%. If the bank decides they want to add buffers for any unexpected events and they want the ratio to be higher, that's really a decision that is made by the banks and not by the regulator. And then the issue around the prime, the spread between the prime and the repo rate, this is one of the questions that I will pass to the governor to respond to as part of the Monetary Policy Committee decisions. So Chair, I hope that I have covered most of the questions that are within my mandate. Some of the policy questions can be covered by some of the colleagues from National Treasury. I see that they are here. But for now, Chair, I will hand over to my colleague Emmanuel just to answer on some of the ITALA questions. Thank you.
Good afternoon, Chair, and all protocols have observed. Just to go straight to answering the questions on ITALA, the Prudential Authority has previously, in September 2024, presented the update to the Parliament Standing Committee on Finance regarding the ITALA matter. But fast forward to today, particularly to the question that the honourable member has posed regarding ITALA, that matter is currently part of the litigation proceedings between the Prudential Authority, ITALA, and its shareholder representatives. So unfortunately, we will not be able to, provide the direct responses to that, given that the matter is sub judice. Thank you, Chair.
Okay. Reserve Bank. The Parliament takes a decision on the 3rd of December on how ITALA should be revitalized. Within a month, you decide to liquidate. And you come here and tell us about the sub judice. FSCA said there are 32 plus banks that they are regulating. You just take a decision to transfer the accounts of ITALA clients to FNB. How did you arrive to that? Are you above Parliament? Yourselves and Treasury. You were so quick to liquidate ITALA. Was it predetermined that you were going to liquidate Ital? Have you studied the resolution of Parliament? Okay, let's pass because you say you sub judice. Let's proceed to FSCA. Can you respond to the questions?
Thank you, Honorary Chair and members for the questions. I think it really is going to the heart of many of these issues. So there was, it came across in a couple of questions about the level of regulation and the suitability of that regulatory oversight. So I want to talk to two aspects of that within our jurisdiction. The first being conduct and consumer protection, and then transformation. So we definitely agree that we can be adapting our conduct law to make it firstly more streamlined and certainly also more proportionate, and that's exactly what we're aiming to do with the National Treasury through the Conduct of Financial Institutions Bill. Already what we are doing is, rather than continually bringing new laws and adding to the existing plethora of what exists, it's around using the existing law, using our supervisory tools to really be responding to challenges that we see in the sector. But again, I think that's a conversation that can take up a whole other day. On transformation, I think also we recognize, as we said in our presentation, the role of the FSCA that we can be playing, and the stronger enabling law that can be provided in this case. And again, we are supporting that through the Conduct of Financial Institutions Bill, National Treasuries Bill. But just to highlight that this is not just a regulatory issue. We need to be enabling, to be supporting competition, and I'll get to some of your questions in a minute. So for example, it's not just around the banks, it's around thinking of the enabling environment that can bring contestability, can bring competition to the existing entities that are there. So Capitec has already shown that it can be done. I mean, we had the big four, now we've got the big five, and they continue to challenge the established four. But we are working on, together with the South African Reserve Bank, the PA, and other regulators, on what we call open finance, which is around bringing in fintechs, these other types of players who can help bring new types of services through new distribution channels and challenge the status quo. And we think that's good, provided it's done in a responsible way. Also the role of the likes of sandboxes, I think the SARB had spoken to this, where we create an environment where new challenging entities can come in within a protected and regulatory environment and test these new models. So if we're talking about access to credit, part of the challenges there hinge on the existing credit models. But if we use alternative data, then maybe more people, more businesses will have access. It means that the providers would be able to monitor their risk in a different way. Those kinds of products are being looked at through the sandbox. There was a question on the collaborative efforts to ensure economic inclusion. Absolutely. We are already doing that, and I think this is going to be a continued objective for us. So, for example, supporting formalization of the funeral insurance sector. This is a joint effort. Our relationship with the National Credit Regulator, as we move towards the coffee framework, we have already started looking at our respective licensing regimes, seeing how we can work together, streamline the obligations on entities, as well as already having joint financial education initiatives. We spoke, there were some questions on how to shift our in effect, away from consumption credit to savings, and I'll speak to that in a minute. Financial education, I think, is really critical within that environment, and we can't overlook it. On the questions around competition and competitiveness in the financial market space, and there were queries around the conduct standard, absolutely. The importance of that conduct standard to be increasing cooperation, and what it does is will support interoperability amongst multiple exchanges. And that's really important because what it means is that it relieves the first player advantage of what is currently held by the JSE and reduces fragmentation. And in doing so, will support active competition in that space. It was published as noted for comments. There has been immense interest. Over 300 pages of comments were received. We are finalizing the consultation report. If there are no material changes to that, we can submit straight through to Parliament for finalization. However, given the extent of the comments, I suspect that we will actually need to continue to engage, which will obviously delay things somewhat, but that's the transparent and rigorous process that we go to, and I think that's important to get the right product at the end of the day. So I'm just checking if there's anything else from my side. There were some questions around dealing with the unbanked. I think just to pick up on this, yes, bringing in the last mile, to refer to as the last mile is important. Also really important, and this is something which is gathering international momentum as well, but I think it's really visible in the South African context, is that it's not just about having a bank account, it's how you use that bank account. And so the quality of that financial service is very important. And this is something, in fact, that South Africa is going to be picking up, National Treasury is picking up through its G20 presidency this year. Yeah, I think lastly, again, to underscore the importance of financial education in many of these processes, we really need to empower and support small businesses and households to be aware of what products are available and actively question and demand really good services. And so thank you very much. And I will hand over firstly to Fazana Badat and then again to Kersha. Thank you.
Thank you very much, Catherine. Honorable Chairperson, honorable members, I didn't get a chance to introduce myself earlier. I'm Fazana Badat, another one of the Deputy Commissioners at the FSCA. Thank you once again for the opportunity and for the questions. I'm very conscious of time, but the issue of bank account closures has come up a few times, and I think it's quite important for us to respond, at least to a certain extent today. The first comment I want to make, and I here appreciate and agree with the comments around the use of, well, banks have a contractual right, and so they may proceed as they wish. From an FSCA's perspective, as many members have said, irrespective of that right, no rights are absolute. And this is the reason why we have the conduct standard for banks, and it's the reason why we're introducing stronger requirements through the conduct of financial institutions is even if a bank was to exercise its contractual right to terminate an account, understanding the economic circumstances of our vulnerable communities, understanding the issues around challenges to bank account, it must be done in a fair and transparent manner. So when we talk about whether the regulation is sufficient, we believe the regulation is sufficient. However, it's a matter of whether the regulation is understood and implemented fairly and consistently across the banking sector. We've spent the past 2 years doing quite an intensive review across 15 banks around how they are implementing the standard and whether when they do terminate bank accounts, they are implementing fair issues. And the truth is there are inconsistencies in practices. We are about to release a report actually setting out a number of good practices and shortcomings that we think we need to work together with the banks to implement these standards. And I appreciate the comment of the Honorable Chair that perhaps we need a further engagement with the committee, because I think we'd like to use that as an opportunity to share the findings of that report and think through how we can work together with the banking sector to address the issues that were raised without necessarily having to change regulation, because as I've said, the regulation currently we believe is sufficient. It's a matter of understanding, interpretation, and awareness. I think the other important point that was raised, which concerns me, are the comments around constituents raising complaints with members because they aren't aware of the recourse that they have, for example, to the National Financial Ombudsman or to resolutions processes within banks themselves. I think this is an important financial education initiative that we need to work together on. I also think in the next iteration, it will be quite important to invite both the National Financial Ombudsman and the Ombudsman Council to talk through why there may be challenges around consumers not understanding the recourse that they have. And the last comment I wanted to make, there was a question on collaboration, particularly between the FSCA and the NCR. I'd like to say this is a journey we've started, we've initiated in terms of working together towards more coherent way of looking both at credit and traditional normal banking, because it is difficult to have two different regulators that are looking at these issues. And we believe it's incredibly important for us to continue collaborating around inclusion, around education, and a number of other consumer protection issues. So once again, we welcome the opportunity to come back and share with you a bit more. We've also got a complaints review report that we've done where we can also share with you some of the shortcomings in terms of the complaints processes that we're seeing. Thank you very much.
Thanks. FSCA, Absa, 7 minutes.
Thank you very much, Chair. It would be good for us to give you detailed answers in writing because there were quite a number of questions directed to Absa. I would like to take this opportunity to just answer a few which are thematic. A number of members asked about the status of Absa. Absa is not a regulator. It's a trade association. It's in a class of trade associations in finance that you find there is ASISA and SAIA, which are trade associations for insurance. There is SAVCA, which represents venture capital organizations. Absa is in that class. It's created by the banks themselves. Therefore, its board, because it's owned by its members, its board is the CEOs of the banks. There isn't any cross-holding in terms of shareholder because as an entity, Absa is an NPO. It exists to serve its members, and it carries the interests of the banks beyond the area where the banks compete. So we will answer other questions in writing. I thought that one I had to address. And then there were others which seem urgent, like the one on interest rates. Honorable members, we've not seen any credible allegations that there's interest rate differential in terms of race. That does not, and it just cannot include race. Each application for a credit product, it's looked at on its own merit. It doesn't include whether you are black or white or any other race. On small businesses, there were also a number of questions which were raised there. That's one where I have to revert so that I give you precise answers. And there were a number of questions on JSE. They were not in the scope of what we came here prepared to answer. We will have to also address those in the list of questions that we still have to canvass and come back to you with the correct answers. I do understand that when it comes to the issues of who is protected or which class of depositors is protected, that the underlying theme that I've heard today has been the need to protect all depositors. I can confirm that all depositors in the banking system in South Africa are protected. And there have been questions on a number of cases. And I have to say, honorable members, that each of the cases, it's dealt with on its own merit. And if there are specific questions of a case that we need to answer to, we answer as part of an answer, as part of a response to a legal challenge. But if members here in Parliament have got specific questions that they need us to address, which are not sub judice, obviously, we will cooperate and answer those questions on individual cases. The other theme that I would like to identify, it's on FSC and targets. I think the question there has looked at ownership, control, and management in particular. Members are correct in saying that what is measured looks as achievements, yet you are questioning the lived experience of individual. So I would say there, because every 5 years at the Financial Sector Transformation Council, it is decided what banks are going to be measured on. I would submit to you that let's look at those agreements, because all the statistics that we have provided, it speaks to the agreements. So I gave you the numbers that relate to the 5 years, 2018 to 2023. Those were agreed in the FSTC. Now, if we are going to increase in any way or change whatever metric, we would have to go back to the agreement and say, what was agreed? Let us now measure them differently, because that's what we have been looking at. We respond to that which is being assessed. There were questions on grey listing and resources spent on compliance. We will answer that in writing. And there were also questions on empowerment finance in terms of percentages for MSMEs. I think we need to respond to you in writing on those, because I don't have those numbers with me. But in terms of regulations have been very clear in terms of not discriminating. Regulations and the law have been very, very clear. There were also questions to BASA that spoke of constituent concerns that have been given to members. I do agree with the FSCA there that the processes are very clear. The reason why the public do not know of those processes is something that we've got to work on, because each of the banks have those processes, and whenever there's a complainant can go to the bank, go through the processes of complaining, and if it is clear that the bank is not able to resolve a complaint, the Finance Ombud, the NFO, is available to take up those cases. And it hasn't, at this stage, we are not aware of these recourse mechanisms failing. So it's a question of financial education and also making sure that we all contribute to making sure that the public does know. Then there were questions on banking practices, quite a lot of them, and the statistics and the disclosure of reasons whenever there's been a closure of bank accounts, and questions of advocacy for customers who have going through this experience, and calls for higher levels of transparency. Chair, we would like to submit those also in writing to you. Thank you very much.
Okay, thanks very much, Reserve Bank, FSCA, and Banking Association. As we have agreed that you will provide some of the questions and the responses in writing, and we'll have another round of engagement with you to deal with the fundamental questions, which we don't have much time for today. Let's break for 20 minutes. There isn't enough food outside for all of us. There is a serious belt tightening by Mr. Bodongwane. So bear with us if you don't get anything there, because it's like they've provided for 20 people, and you can see we are 50, but we are more than 50 here. So some of us will be on a way less program. Just drink water. Yeah, the issue of budget is serious here in Parliament. So let's break for 20 minutes and come back, and Honorable Masina will take over when we come back.
Can we request colleagues who are outside to come in so that we can start? Can we request the CEOs to come to the front so that it's easy to just manage from the banks? And then, and we request other team members to take their seats. Thank you very much. If we can then proceed, we'll ask the members who are still outside to come in quietly. In August, September 2024, the committee engaged with the Competition Commission and the National Credit Regulator on their 2024-25 annual performance plan. A number of issues related to the banking sectors were raised, including, amongst others, the cost and availability of credit to historically disadvantaged people, the availability of credit for productive purposes such as starting a small business or investing in industrial capacity, the lack of extension of developmental credit as defined in the National Credit Act, as well as disparities between the credit regulation and regulations of financial conduct. Subsequent in the meeting with the Standing Committee on Finance on the 22nd of November 2024, the committee engaged the National Treasury, the National Credit Regulator, and the Competition Commission on regulations of banking sector and matters pertaining to credit competition. The following issues, amongst others, emanated from the engagement: the lack of access to development finance and its potential impact on service delivery and support of industrial growth, and whether there's been any existing remedies or strategies to improve access to finance for developmental purposes. The decline in developmental credit finance granted since the first quarter of 2022, the importance of the establishing a financial mechanism or vehicle to support small business in rural areas, the fact that only 3% of the 2.5 trillion outstanding debt book has been directed towards developmental credit, and the lack of credit providers for productive purposes to ease access to credit for consumption. In light of the above, the purpose of today's joint meeting is to engage the identified banks, including the Banking Association of South Africa, on credit provision and competition matters pertaining to particular access to credit for previously disadvantaged individuals. Furthermore, the aim of the committee is to engage the South African Reserve Bank, the Prudential Authority, and Financial Sector Conduct Authority on status of the banking sector and South Africa's savings and credit lending profile, particularly in relation to the advancement of inclusive economic development. In addition, these entities have been requested to brief the committee on the determination of the banking charges levied on consumers and the use of personal client information product offering on the implementation of the financial sector charters. These are some of the issues that have made us to invite the banking sector in South Africa. We have looked into the assets of the country, and we believe that a lot of work can be done to ensure that we advance transformation as well as to build a strong, sustainable economy. I would like now to, due to the time constraint, request the colleagues who will be presenting. We had allocated initially about 30 minutes. We want to cut it to 20 so that we can save an hour for engagements and responses. And then some of the responses, as we did with the first session, we will ensure that probably we can receive them 5 days later in writing in case, so that we can save a bit of time, but it will be important on record to answer some of the critical and topical issues as it relates to the issues. We will now allow the delegation. We've got the list of the delegation. In the interest of time, the leader to at least now take us through. We'll start with Absa Bank. Thank you very much.
Good day, Honourable Chairperson and honourable members of the committees. I'd like to begin by taking the opportunity to thank you for the opportunity to participate in today's proceedings on what we at Absa agree is a very important topic.
Sorry, CEO, if you can just bring the mic closer to you, because thank you.
Is that better? I'm joined today, I'll take you through the presentation. I'm joined today by Faisal McKees, who's our head of our relationship banking, which looks after business banking, including small and medium enterprises. I'm also joined by Yasmin Masatela, who heads up our Corporate and Investment Bank, and Rajal Vaidya, who's our Group Chief Risk Officer. We've provided written submissions to the committees last week, so my presentation this morning or today will deal with the salient points of our contribution to this discussion. If you turn to the next slide. I would like to take this moment to provide context to the flow of our presentation. I'll start by providing our understanding of the request for this meeting before summarizing our key messages and highlighting how we see Absa's role as a commercial bank in transforming our economy. I'll then move to our response to the questions that we received from the committees ahead of today. We understand that this meeting has been constituted to have a discussion on the role that banks play in supporting economic transformation and industrialization within South Africa. From our engagements with the committee secretariat, we understand that as a committee, you have a number of questions for Absa, focusing on development credit finance products offered by ourselves, including lending criteria, interest rates, and marketing strategies. Proportion of outstanding development finance compared to our total debtors book and the purposes of these finances, trends in development credit finance over the last decade, and the availability of credit for productive versus consumption purposes, especially for historically disadvantaged individuals. As a committee, you would also like to assess our relationship with development finance institutions. As I said earlier, as Absa, we believe that these are important discussions, and we absolutely welcome the opportunity for constructive engagement. As Absa, we are deeply committed to driving positive change across South Africa's development and are steadfast in being a proactive institution in the space. As I will discuss later, our organization's purpose, or the very core of why we as an organization exist, is focusing on empowering customers in their life stories. The trusted place we hold as a global financial institution is not lost on us, and we are conscious of the responsibility it places on us as we look to drive positive change across the markets in which we operate, whilst also being aware of the systemic role we play in the global economy. Given the systemic nature of our organization and financial institutions globally, we operate in a highly regulated environment and are subject to both local and international regulations across our business. In fact, as an organization, we are subject to ever-increasing regulations that we need to and must ensure compliance with. Notwithstanding these regulations, as a responsible corporate citizen, we understand that we have a particular role to play in supporting the nation's national development initiatives, together with various other stakeholders, including the government, development finance institutions, and the broader business community. Absa as a commercial bank has a primary role of being a conduit of capital, like all other commercial banks. And core to our role is to move capital efficiently from where it is in the economy to where it is needed. In other words, we take capital from customers with capital and deploy it to customers who need to borrow money for a variety of reasons. In providing this most fundamental of functions, we service clients across the spectrum of economic activity, from individual consumers who wish to purchase a home, to purchasing a business who require capital to buy goods, to governments, to DFIs who borrow to build roads, schools, bridges, etc. To do this effectively, we need to ensure that we exercise the appropriate care and diligence as we aim to establish the highest level of trust as the primary source of capital for these borrowers are deposits from our customers. In fact, in 2023, over 70% of the loans on our balance sheet as at the end of the year were funded by depositors, with close on 50% of this amount being deposits from individuals and small and medium-sized businesses. It is for this very fact that the Banks Act in South Africa strictly governs the protection of banks' depositors, whilst banking regulations ensure banks operate in a manner that manages a range of risks, including credit, operational, market, and other risks. As I mentioned in my opening remarks, commercial banks and developmental finance institutions both have important roles to play in advancing the developmental agenda. However, their roles are separate and distinctive, despite the fact that they will work closely with each other in the developmental finance value chain. As discussed, commercial banks have a specific focus on supporting both businesses and consumers. Businesses in running and growing their businesses, and consumers providing access to financial products that assist them in building and growing their wealth. Development finance institutions generally take a longer-term view on the tenor and the gestation periods for financing projects and focus on the developmental aspects of transactions, including both social and developmental. However, there's an overlap as commercial banks play a critical role in connecting and facilitating relationships and financing between the end consumer and the development finance institution. Absa has successfully partnered with DFIs across various societal areas, and we're incredibly proud of the real change delivered through these partnerships. And I'll mention just a couple of these. We have recently partnered with the IFC on a 4.5 billion loan facility, of which at least 50% must be granted towards affordable housing initiatives with a focus on women. This partnership follows a 2 billion IFC loan in 2022, which was dispersed for affordable housing initiatives before the end of 2023. We have recently concluded a partnership with the African Development Bank in securing a 1.7 billion facility to support women and youth-owned SMEs in South Africa, with a specific focus on agriculture and manufacturing sectors. Partnering with SEDFA, a DFI with the Department of Small Business Development, to provide the Kula Guarantee Scheme, which has enabled us to provide over 1.2 billion in funding to SMMEs over the past 3 years. We recently concluded an agreement with the Gauteng Provincial Government and the IDC to jointly provide an additional 200 million facility for township economic development. We jointly developed the implementation model, which started disbursements as recently as January this year. Within our corporate bank, we have close relationships with South Africa's DFIs, such as the IDC and the Development Bank of South Africa, and currently have approved credit funding limits in excess of 5 billion to these DFIs to help drive the development agenda. As a locally significant financial services provider, we are well aware of the role we play in supporting the national development imperatives and are conscious of how we play that role within the economy. The providing of finance to consumers and businesses is the lifeblood to a growing and developing economy, and we obviously have a key role to play here. We are particularly pleased that over 90% of our lending in South Africa is productive, which is to say that it is non-consumption based. Our lending is universal in nature and similar to other commercial banks. However, we have specific products that we view as being critical development finance opportunities within the South African context. We have over 52 billion drawn in exposures to SMMEs and corporates in the agriculture sector, which is an area of focus for the country. We have provided over 10 billion in funding to small businesses, whilst also removing the barriers to becoming a banking customer. We have more than doubled our affordable housing lending since 2019, and as at the end of 2023, we have an affordable housing book of approximately 18 billion. Education is a national imperative, and we've provided approximately 1 billion in student loans as we make education more accessible. Looking further than our lending products, Absa is proud of its standing as a corporate social citizen. And over the past 5 years, we've invested 1.5 billion in corporate and social investment projects that have touched more than 1.2 million beneficiaries. This investment is specifically focused on employability, education, and social projects. As a business, we have also provided relief in times of hardship, and there can be no greater example of hardship in recent history than the lockdown period enforced during the COVID pandemic. During this period, we partnered alongside our customers to provide more than 60 billion in debt payment relief across our consumer, business, corporate clients, as we sought to provide economic stability within the country. As I said earlier, we believe strongly that a globally significant bank, as a globally significant bank, we have a role in developing the economy by providing finance to those consumers and businesses that want to invest in their future wealth. I'm pleased to say that over the last 10 years, we have done this, as we have almost doubled the amount of finance provided over this period. In the last 10 years, loans to customers have grown by a compounded annual rate of 6.5%, which it must be noted is higher than the average GDP growth rate of 0.8. This growth has been broad-based across portfolios with growth in consumer, SME, and corporate products. As mentioned earlier, we believe that over 90% of this lending has been for productive purposes. Within our South African retail business, which has loans of 520 billion, 430 of this is asset-backed lending or secured lending as we refer to it, which is funding provided to consumers to purchase houses or assets, which are important developmental finance aspects. Whilst the funding offered to businesses, be it term loans, working capital, trade loans, etc., are developmental, as these enable those firms to grow and contribute to a growing economy, offering increased employment. At Absa, we live by our purpose statement, which is empowering Africa's tomorrow together, one story at a time. And this is at the core of what we do. We are a Pan-African bank with a footprint in 16 countries, servicing individuals, SMEs, corporates, multinationals, financial institutions, banks, governments, and development finance institutions. However, approximately 70% of our business is in South Africa, and we are proud of our transformation journey, as well as our efforts in transforming the local economy, as we have taken deliberate actions across numerous areas. In 2023, we launched our second BBBEE transaction, valued at 11 billion rand. This transaction was historic, as it transferred 4% ownership of Absa to colleagues, while the remaining 7% was transferred to a corporate social investment trust. This CSI trust is a first of its kind transaction, and has created an evergreen CSI trust where dividends earned from Absa will be used to promote education activities to previously disadvantaged communities across the country on an annual basis. Absa is also proudly a level 1 BBBEE rated organization and has been since Barclays sell down 5 years ago. As a significant consumer of products and services within the South African market, we are particularly conscious of the need to promote access to market for previously disadvantaged individuals. And in 2023 alone, we procured goods and services worth in excess of 10 billion from companies that were greater than 51% owned by Black suppliers. We also procured goods and services valued at over 8 billion from firms that were more than 30% owned by Black women. Universal financial education is a critical lever in our nation's development, and I'm pleased to say that in 2023 alone, we have educated over 100,000 beneficiaries in financial literacy. We have also dispersed 4.7 billion in BBBEE financing in 2023 as we assist other corporates and individuals in their endeavors to promote greater transformation in the economy. We also realize that we have a part to play in facilitating the government's role in the transformation of the economy. And to this end, we have over 290 billion in approved credit limits to public sector entities, of which 32 billion is in funding to metropolitan municipalities. In conclusion, at Absa, we are driven by our purpose, empowering Africa's tomorrow together, one story at a time. We have a deep commitment to use our position as a conduit for capital, to channel resources in a manner that drives inclusive economic growth. As a trusted, systemically relevant global financial institution, we appreciate the role we play in advancing South Africa's socio-economic development. However, we are extremely conscious of the trust placed in us by our depositors as we protect and grow their wealth. Absa has a long and historic relationship with development finance institutions, and we have and will continue to partner with them to effect transformational and inclusive economic growth. Absa continues to play a role in supporting national development imperatives. Our efforts over the past few years, alongside businesses and partnering with government in delivering the structural reforms necessary to deliver a growing and inclusive economy, are testament to this. Honorable Chairpersons, we appreciate and welcome the opportunity you have given us and would like to continue to engage and seek feedback in ways that we can create an inclusive economic environment for growth. I thank you, Honorable Chairperson.
Thank you very much. We really appreciate how you've been able to spare the time. We'll request the next presenters to do the same. Capitec. Time a year by the Secretary just to make sure we're fair. So over to you.
Good afternoon, ladies and gentlemen. It's a pleasure for me to present what we need to press. It's a pleasure for me to present what we're doing at Capitec. I'm going to give you a little bit of background about Capitec, a little bit of history, then challenges, because I've heard quite a lot of challenges this morning, and then what are we doing about it, and then I'll answer the 6 questions. So if I look at our purpose in Capitec, why we're living, what are we doing, is to make a meaningful difference in people's lives. And that is especially now that we're going into the SME space with the acquiring of Mercantile Bank. What do we stand for? What is our fundamentals? I think everyone knows by now we've got a very transparent, simplistic banking formula, which is built on affordability, accessibility, service, and trust. So what is important is every single person that is helped in Capitec is helped in exactly the same manner, same pricing, same product. There's no differentiation who you are. And then for us, what is very important is the branch side. And in the branch side, what is important is we employ people from the community to serve the community. So very transparent, very straightforward. Everyone is treated the same, no differentiation at all on pricing and what you're seeing. There's our history. We break it up into 4 phases. We actually started off as a micro lender, then transformed into a personal bank from about 2014, then moved very strongly into digital banking, and then financial services. I think what is interesting, if you look at South Africa, we're banking now about, or people that's got a Capitec account is about 23 million clients. And 12 million of those are digital. So there's 10 million that is not. And that is why we've got branches, and that's why we're servicing them with our 850 branches. We've just signed off the budget, and we're going to increase that number of branches with another 20, because there is a need for people to actually communicate and to understand what's happening. I think what is important for us is if you look at our retail side, everything that we provide credit on is unsecured. So if you look at 2024, that 84 billion is all unsecured. And then if you look at the business banking side, of that 19 billion, 18 billion is secured, 1 billion is unsecured. And if you look at where we see that will go is, it'll probably be a 50-50. I think what is interesting, and I'll come to challenges now, is if I look at our National Credit Act, that was came in force in 2006, so that's about 20 years ago. And the affordability regulations came in 2015, which is about 10 years ago. So that's the background. What is the challenges in the economy and the way we see it, and especially on the SME side? If you look at what we're seeing in the retail space, we get a lot of data from clients whereby we can actually go to the credit bureau, we can see the transactional side, and then we can provide credit from that particular perspective. What are you sitting? And I'm talking of informal, or we call it emerging markets, or township markets. The majority of people are not banked. The majority of people are cash. 80% of that community is cash. You've got no information. So it's extremely difficult if the people don't bank and they don't do transactions electronically to actually really understand and how to service themselves. And I can give you numerous examples of people that's got a turnover of 100,000, 200,000, 300,000 when I'm in the townships that has got no banking and everything is cash. So that is a big challenge for us going forward. I think that's something we need to look and say, how do we actually break the cash society and actually get people to actually use electronics so that we can help them? I think the other one is on communal land. The communal land hasn't got a title deed. You can't provide credit on that. You can't give a mortgage on it. We've sat with numerous conversations with chiefs, et cetera, to try and understand how can we get to it. And we couldn't get to a solution. So there's an opportunity if we really want to unlock value in South Africa. Then if you look at capital, and I think capital came out, if you're in unsecured lending, according to Basel IV, you're carrying double the amount of capital than if you're unsecured. So immediately your cost of providing credit is much higher. If you look at providing credit, you're sitting with about 40%, which is capital, 40% is with bad debts, and 20% is operating expenses. So I think one needs to understand that the credit of the capital requirements is fairly high the moment you're in the unsecured space. And then if I look at the National Credit Act, I've mentioned how old it is. That hasn't been updated in the last 20 years. And the last 10 years, if you look at the affordability regulations, the affordability regulations on 850 Rand living expenses has been there since 2015. It hasn't been updated. We've updated every year with inflation, but it hasn't been a change. It's not taking into consideration the whole digital world that we're playing in now. It's still manual, it's still paper. So we need, as South Africans, we need to challenge that and say, how do we bring it in line with what we're doing in the banking space? What are we doing? I think you need to understand that 89 billion has been provided unsecured. A big portion of that, you need to have a payslip, and we work from your payslip. But we started to realize, but we need to get to other opportunities. And what we've done is, especially to get your pricing down, we've gone into purpose lending. And purpose lending is actually provided for building, if you renovate, if you buy a vehicle. The average vehicle in South Africa, average age of a vehicle in South Africa is 9 years old. So you're struggling to get finance. So how do you finance a vehicle? And then you go into education. And what you can see is what we've done is created a purpose vehicle where we pay directly to the suppliers at about a 5% discount on the average rate to make certain that people can get it. Because what you're seeing is if they've got a purpose with it, you can price it differently because your arrears is on a different level. So we've got agreements with 800 building supply locations, 1,100 vehicle dealers, and 330 tertiary educations. I think what we've also seen in the market is the Gen Z people, the younger generations. They haven't got one job. They will have numerous jobs or numerous incomes. So a person will have a salary, but he will have rental income, or he will be a social media. So you need to bring in all other aspects of people's income and to be able to score and to understand how do you create a credit. So we've built quite a lot of models, credit models, to be able to understand that risk and to understand that income, to be able to provide credit. And you can see where the growth rate that's coming through it. It's interesting if you look at purpose, we're looking at now in next year around about 3 to 4 billion. And if you look at the multiple incomers, we're looking at around about the same figure that's going to come through. If I look at, I'm going backwards. If I look at business bank, I think what is important to share is when we bought Mercantile, we said we want to service the SME market. And the SME market is the small, medium, emerging market. We didn't want to be in a commercial space. We want to be in a small, medium space. And that's where our focus is going to be. I've already explained the whole cash situation, what's happening in the townships and how do you break it. And what we've done is, I think the first step is to make banking available. Our pricing on retail and on business banking is exactly the same. And you can see there on the right, it's a very simplistic transaction platform. If you do a Capitec to Capitec payment, it's R1. If you do a Capitec to some other bank, it's R2. If you do a debit order, R3, RTC R6, and cash R10. That's our transactional platform. The first thing is to make certain that people actually really start banking with ourselves so that we can understand the client. I think the next phase for us is actually to go in and say, how do we make transactionals more, let people move away from cash, that they move to transactional side. And what we've done is, if you look at the point of sale strategy up to now from all the banks, we were also there. You rent it at, make it R500 a month. It's expensive. We now are making those devices available at the lower end, the Pro at 999 and the top end at 2,000 Rand, once off purchase. And then what we've done is we've cut the commission rates to as low as possible to encourage people to really swipe. Because the moment we can understand what you're doing is, then we can provide credit given our experience that we've got an unsecured credit. And what is important is that we are also making certain that people can pay on a flexible basis. So all inflows, cash and electronic that's coming into his bank account, we can deduct a pre-agreed percentage from that client. So he can say 5% or 10% or whatever, and we can deduct that and make certain that he can manage his personal life. So those are the things that we are doing in our strategies to try and unlock this potential in South Africa. I think the question